Well, good afternoon. This is the second panel for the day, and the topic is the pros and cons of ICOs. We've got a panel of, let's see, how many? 5? Maybe what we can do is provide a brief introduction for each, and let's start with the lady in the middle.
My name is Susan Akbarpur. Thank you. This is much better. Susan Akbarpur. I'm a serial entrepreneur slash investor. I've been in media and marketing almost for half of my life so far. And 7 years ago, when I went back to graduate school of business, I was studying about new advertising models' effect on user privacy and surplus to see why we're shadowing users everywhere and why we're aggregating data about them and what they're really getting out of that. I didn't find any correlation between new advertising models and user privacy and surplus, and I decided to create a user-centric or consumer-centric advertising platform. It took us 7 years to develop a very strong platform, having over 50 developers working on that for creating user-generated advertising. Influence marketing probably is a more familiar terminology. We had serious prominent investors behind the company, including Chief Privacy Officer of Facebook, former CEO of Macy's, Yves Saint Laurent, EVP of Apple, my professor in Stanford, all these amazing VP of marketing of eBay, everyone who thought that this is really the way to go. And we see after 7 years, GDPR and all these regulations are coming after non-consumer centric advertising. We were 7 years early, and we thought that we created this great technology that can allow anyone to influence product sales, especially for top retailers who has seen a competition from Amazon side. And when we went to media companies, CPGs, anyone who could use our software, marketplace and shoppable content publishing platform, and partner with top retailers, they all saw the software, and there was this weird question. We licensed it to a couple enterprise customers, but the question was, who wants to take care of these micropayments? You are creating a sales force of 2 million, let's say 2 million people who are selling my products for me, and I'm Walmart. But who wants to send 2 million checks, sometimes at a fraction of dollars, for all of these guys? Every check that I'm cutting can cost me $15 to $20. And this is a very costly product. You scale these influence marketing to the extent that I can't afford it. And that was a very, very sad day for our entire team. And if it would have been because of blockchain and cryptocurrency, we should have shut down the company. So the utility of our token is really saving the company's life. And now with using cryptocurrency, we can allow our customers to basically run these campaigns and reward the influencers with the tokens, and they can actually exchange it when they want it, and when they think they can accumulate enough rewards to do that. So on the investment side, I'm also a partner in Can Do Ventures, and we just recently started investing on crypto and ICOs. The most important one is Telegram.
Christian.
Do we all get 5 minutes?
Let's
No.
be...
No. Christian Kehmeyer, I'm an operator in the ICO space. Have done a few tokenization processes in the past, running one right now. If you were here this morning, you saw that one. And other than that, I'm a recovering lawyer from the old world.
Thank you.
Hi, my name is Keith Herman, and I'm the founder of IPA Equities. over the last 30 years, I've owned over 50 businesses in 6 different verticals. I'm also the founder of PMBC Group, a technology PR firm, and we've represented over 200 technology companies worldwide, represent quite a few companies in blockchain and the crypto space, including Dash, UC Berkeley blockchain affiliate companies, and a list that goes on and on. I personally am invested in over 20 blockchain companies myself, and can't comment on those, but I'm involved in also consulting with folks that are looking to get involved in this space, and also speak frequently.
Jas?
My name is Jas Dillon. I am Chief Strategy and Product Officer for one of the leading fintech companies called LeadPoint. We've been in business 15 years. We started off in the financial lead generation space, and we're one of the top 3 companies serving that industry. We see there's a big opportunity to improve financial inclusion in the world. So what we're doing is we're transitioning our entire platform from what we call a transactional model to a lifetime relationship-based model. And as part of that, we intend to solve a number of key problems that exist in the consumer credit space. And this includes the fact that getting credit is incredibly inefficient, whether you're in North America or whether you're in Asia. And the second thing is that providing credit is incredibly localized, and it doesn't need to be. So we see the blockchain playing a big role in solving both of those problems. Our objective is essentially to take a five-year perspective on this thing. We have been in this for the long term. The founders of our company have been in both ad tech and finance for, over 20 years. So we are pretty excited about the potential about transforming and focusing on empowering the consumer in terms of getting credit on a global basis.
Thank you. Gene?
I'm Gene Massey with MediaShares, a consulting firm that works with companies, walking them through the funding process. Right now, we're very excited about IT biometrics. You may have seen Andy Finch speak this morning on the fingerprint wallet that is probably the best, most sophisticated fingerprint reader in the world, and it is designed to be a cold hardware wallet that is that you can access your exchange, your cryptocurrency account without getting hacked. And we will be doing, we're filing a Reg D first, and then we're filing for a Reg A. We're going to tokenize it, and we will be, we're leaving tomorrow for Zurich, the conference there, and then we speak at Sydney's event in London on April the 4th, and then we go to Warsaw, where we attend that conference, and then we go to Dubai, and then we come back to Los Angeles for the Start Engine ICO Summit on April the 20th, I believe it is. Gene Massey with MediaShares.
Thanks, Gene. Let's start out with maybe the elephant in the room. ICOs have been one of the new tools of capital formation. The SEC and some of the other regulators are certainly coming into the space and making their weight substantive. Could the panel open to the panel here? How would you gauge the current landscape relative to the regulators with respect to ICOs? And does the SEC in particular, are they adding value to this new industry, this new finance industry, or not?
Well, this is mostly a semantic problem, really, because the SEC or any other regulator, they don't regulate technology. They regulate their citizens, right? So all that's going to happen is everybody in the room here that's a US citizen is already excluded from most ICOs right now. That's the end of it.
46% of the ICOs have failed, and 80% of them have not returned any money to their investors. And that's the reason that we have an SEC The reason that ICOs took off like skyrockets was because they were skirting the regulations that are onerous to comply with. And now you hear at the conference yesterday and the day before them talking about everything's bearish now. And the reason it's bearish is because there have been tens of subpoenas issued to ICO companies that are not in compliance with the rules. And so that's why everybody's, and it's changing now, you're going to need to comply with the rules. That's why I was asking the gentleman earlier today, what exemption, SEC exemption are you working under? So the whole atmosphere is changing because the SEC is coming down here, and many ICOs are still talking now about, well, we're going to do it in another country or stuff like that. But here, there are a number of people that have put money in it that have not gotten their money back, and that's why we have an SEC.
Christian, Josh, hold on a second, Josh.
Okay. I would agree with what Gene is saying. The role of the SEC is also to play a protective role. And having researched this for the last 6 months, as we move forward towards considering an ICO, we are working on doing it with a security token, and it's going to be in compliance with all SEC regulations.
No such thing.
Well, it's evolving.
No, can't.
Well, you're entitled to your opinion. So, you know, it's a fluid situation. It changes daily, but you know, as far as we're concerned, we are taking a very conservative route.
Please.
Ladies first.
Thank you. When you look at the statistics of failing ICOs, you see that actually it's comparable with the statistics on failing venture-backed companies. 95% of the venture-backed companies are failing as well. So the fact that SEC came and we're talking about two types of tokens, security versus commodity, and not thinking about a new type, utility token, where, as I told you about micropayments, for example, are the best utility of any token, because without that, with fiat money, you can't practically do that. All these industries that are based on, like, for example, sharing economy, micropayments, micro-settlements, can't really get anywhere because they are based on the platforms that need a lot of basically data, user acquisition. There are a lot of metrics that they need to meet to get to the point that a VC can even look at them and fund them. We have this amazing vehicle for crowdfunding, and if you see the ICO investors, you see 90% of them are developers all around the world. That's a huge community of early adopters that are putting their confirmation sign on a technology, right? If they get excited about it, there should be something real about that promise. And I accept the fact that there are many, many promises on the white papers and nothing else behind them. But I think we should allow investors to become smarter and come up with new metrics. As you see, the market is settling down before our eyes, and these metrics are actually showing up right now. People or investors are investing on existing platforms that are removing a real bottleneck using blockchain and cryptocurrencies, and you know they look at the team, look at the product, look at the hard cap, look at many metrics that are important for any investment. So I think SEC claiming that we haven't seen any utility token because they didn't have a great use case in front of them, it was a little bit too early. We should allow this innovation and this industry and this paradigm shift to fly a little bit and then start regulating it.
Yeah, so the token aspect and the currency aspect is honestly the least interesting aspect of most of those systems. They are platforms. They're powering a new type of software. Like, so if they have a currency as kind of a side effect of what they are doing, that's what it is. It's a side effect. Yes, Bitcoin was meant to be a currency for exchange. It became kind of a store of value now, and Ether is more the actual transactional currency. Most of the other real projects, they're actually trying to build a platform of sorts, and they use an ERC-20 money token or something else to facilitate that, but it's not meant to circumvent anything. And this notion that the regular mom and pop, like the Congresswoman said the other day on the broadcast, and that they are getting scammed out their investments, it's ludicrous, right? Your mom has never looked at an ICO, and even you probably could invest in any ICO right now if you wanted to, right? So you would have to first get through the step of getting some Ether, right? So yeah, you can create a Coinbase account and then look at any ICO, then they make you go through KYC and ends right there because you're a US citizen for the most part, right? So the idea that our regulators here in the United States are protecting anybody is simply not true. We all know where it's driven from, right? It's driven by the legacy financial institutions that don't want this new technology to advance in the United States. It's not like it's a secret.
What is your opinion, though? No, I'm kidding.
I give an hour-long speech about that. Should I get?
How do you really feel?
Now we're confused.
Josh, you were going to say something.
So, I agree that utility tokens enable new forms of business models, and we should explore those. But I'm part of the tech community. I'm part of the crypto community, and I have colleagues and friends who have made a lot of money, and these are smart people who have stars in their eyes, okay? But because they're thinking about everything as a currency. I mean, it's amazing that you talk to people, smart, rational people, and they think they're going to make money on highly speculative business models because all of a sudden everything's going to become a currency. You know, there are going to be like 1,000 currencies out there. It's just not realistic. So if there are other ways for people to make money using utility tokens because you create a great platform, you solve a real problem, of course the SEC should allow that. But I think what our legal advisors are, we work with Perkins Coie, which is one of the top law firms in the space, very conservative, but they've been in the crypto space right from the very beginning. And one of the big issue here is this whole currency angle. Everyone thinks that they're going to buy all these tokens and they're going to either appreciate from the pre-ICO round to the actual ICO round. I think that's one of the areas that is of concern. Okay.
Susan, you were talking about sort of the investor makeup. Is this really an investing market, or is it a pure speculation Ponzi scheme? You've got some whales out there that are controlling much of the movement, or is it a very democratic capital market system where you can assess supply and demand, and there's an underlying value to these tokens?
When you're investing or actually you're participating in Presale, which is pure investment because it's a security token at that time, right? And the public ICO and crowdfunding part of it, yes, it can be a speculation because you're dealing with investors who are putting small bids, right? And that can be valuable. As I said, I look at them as an early adopters, right? Because they look at the smart contract, which is usually publicly available on GitHub for good, relevant and not legit ICOs, basically. So they look at it and then they're coming and put the small bids. They're not really, they won't be suffering from putting a small bids, but as you can see, all these small bids can really move the needle in aggregation, which is good for a company. As I said, yes, part of it is investment, especially when you get involved in the pre-sale because you're buying basically security. And but when you get to the crowdfunding part, that moves and the speculation is a major part of it. But what I'm saying is maybe it's too early, to regulate all of this, especially if, there are small bids to that. No one will suffer at the end. But if someone comes and sell their home to, put their money in one of these ICOs, that's where SEC should come in, But if maybe we can regulate it and say that you can, put a little bit, not too much, if you're not an accredited investors. But I guess if we can come up with some definitions and metrics soon enough, right? Because unfortunately, when SEC plays a scarecrow without giving us any clear guideline, right? There are a lot of people who are scared off because they don't want to go to jail, they don't want to deal with complexity and so on. It's just like we maybe come up with some regulations and metrics that are saving or basically protecting both sides, entrepreneurs as well as investors or crypto investors.
So we had tokens for a long time, right? Everybody in the room owns token, has owned token for a long time. They call them frequent flyer miles. Just because all of a sudden there's a standard for it that lets you exchange it to something else, doesn't make it something else, right? So if the SEC wants to step in and regulate tokens that are pre-sales, by the way, that you buy at a wholesale discount, basically, if they're immediately usable, that's all you're getting.
They should regulate
right? They should
coupons
regulate coupons. They should
There's a
regulate
eBay
United
marketplace.
Airlines, frequent flyer miles, you name it. Any points out there that there is, obviously.
Chris,
think about it this way.
that.
Yes,
Let me say
Gene.
something about that. A token, a utility token, is a thing that you buy for $1 and you put it in the parking meter and it lets you park.
To do a function. Yeah.
A security token is a token you sell now in a pre-ICO sale at a discount for 50 cents, and you tell everybody it's going to be worth a lot more later because you're going to be able to use it in 6 other parking meters later, and you're going to be able to sell it to your friends on an exchange. That's a security token. A simple utility token is, I give you $1 for that, you can use it in your parking meter. Am I wrong or right?
You're wrong. No, it's very simple. So I used this example this morning. So if Google had decided, instead of doing their public offering in, I think, 2004, to pre-sell advertising to all of you guys, and you could have bought whatever amount you wanted to at a fixed price of 5 cents per click, you should have bought as many as you could, because that click is now $1.50. And the company would have retained all its equity.
Mixing the token utility with the commerce of a business is inherently, a dangerous idea, unless you're very clear about your business model.
Right, it comes down to the complexity of the smart contract. I don't think you want to go into this here.
Well, it comes down into the validity of the business model and how well the owners of the business have actually thought through all the implications of the business model.
Correct, because the main objective of the blockchain in general is to align interests, and this is what a token allows you to do, right? So that everybody, it always comes down to the typical example that Brock always made. Imagine if you could only buy Apple product with Apple stock, so to speak, or Apple tokens. So you had a typical alignment of interest. You would be the one promoting this particular token because you held the token. So it's inherently good for everybody to align the interest, and you can audit it, right? It's public. You can see the audit trail. You know who owns it. You don't have to participate. No one forces you, and you know the governments of the particular token you're buying into. But then again, most of this conversation is entirely mute for the US citizen at this point in time, unfortunately, due to the uncertainty that the regulators created. They're not creating a certainty, right? I mean, we still have 2 other more regulators to go through, and they already declared different opinions anyway, right? So it's neither a commodity nor it's property. What's the third thing? Security. No, it's a new thing. So just accept the fact that it's a new thing. You can't make the square peg go through a round hole anymore. Realize we invented something new and deal with it, right? So don't try to make it fit regulation anything, because no, it's never going to work. A token doesn't adhere to those principles because there's going to be a million different functionalities in those tokens that you can write into this. You can do this. I mean, everybody on the panel here can tokenize themselves in about 3 minutes, right? Just copy that code from the wiki and create your own Gene token and start selling it if you wanted to. You can tokenize your time, right? I have 1,000 hours to sell. Why should any regulator in the United States stop you anywhere in the world?
The San Quentin token, right? The San Quentin token?
Absolutely.
Keith, your gray matter is working. Yeah.
We're talking about Beanie Babies, I guess, right?
Yeah.
So collection. However, I guess defining the third category of the tokens, utility token, it means a token that you're using to do a certain function. And the reason that the value goes up, because the demand goes up and the supply is always the same, right? So you have released 100 millions of tokens, and now everyone wants to buy it to do that function because it's popular, it works, it's good, it makes it easier for that function to be done. And now the demand goes up, the value goes up. This is the third category of the tokens, that you're not buying it like gold coin because there's a limited supply and everyone wants it to just have it, like Beanie Babies, right? That's a security token. Commodity, you're just buying stuff with it, all of that. The third category needs to be defined as soon as possible, and I totally agree that SEC should come up with some limiting regulations, like put a minimum or cap on your investment if you're not an accredited investor. You can just put maybe not more than $1,000, but let it be for a couple years, because the best applications of the blockchain and cryptocurrency will show to investors and everyone how we can leverage this paradigm shift. That's all I'm saying.
Hold on a sec. I'd like to have Keith chime in because he's been famously quiet.
Well, I'm quiet on this matter because for me it's really pretty simple. I don't think it warrants this much discussion. The SEC already has, regulations in place for a purpose. They're in place to actually promote capital formation and allow businesses to thrive. Hold on. They're not anti-business. They're not trying to stand in the way. They're just trying to provide some sort of framework to protect people against fraud. That being said, companies who think that they're excluded somehow, or that this is something new and they don't need to follow those guidelines, I think that that's kind of naive, because you should always, hope for the best but prepare for the worst. And we know what the worst is because there's already regulations there. So moving forward, I don't really think that people are going to roll the dice that they're exempt. And I think there's just going to be more compliance to conform to what the rules are within the U.S. And, hopefully they won't launch a huge investigation. They'll just grandfather some things in, exclude the things that are really fraudulent, and we'll move on. It's not really productive to grow this ecosystem. Getting bogged down, it's no different than, investigating things that have passed and the damage is already done. We can learn from these experiences, but too much time is not helpful. The last thing I want to say is with regards to the bear market, I don't really see this as a bear market. It's a bear market because of speculators who are speculating. The people who are really invested in this space are invested for the long term, have long-term vision, and are not, liquidating their holdings. So I think it's a great time to invest and to get involved in the space. I think you should support causes that have worldwide impact. And it's a great time. I think that, the barrier to entry should be lower. I agree with everybody. We want to see more of these technologies come online. For the moment, the regulations are what they are. It would be great if they would say, hey, we're going to make it a little bit easier, but we still need some sort of framework to prevent fraud.
Yeah, let's pivot for a second. ICOs are one of the new ways to raise capital vis-a-vis crowdfunding or venture capital. I'd be curious on the panel's view of the pluses and minuses using ICOs as opposed to more conventional practices of capital formation. I say this because a lot of companies aspire to go public. I've been a banker all my career, public companies, private companies, and whatnot. And I'm a big believer that, the public markets are not the panacea. If you go public the wrong way with insufficient float, with insufficient coverage, you're subject to the vagaries of the market, and you really could do much, much better if, in fact, you kept the company private and raised money at even higher valuations in the private market than the public market. So I'd be interested in the panel's view of the pluses and minuses of ICOs as a capital raising vehicle or means versus some of the more well-funded.
So I would say the biggest positive is that you have a worldwide audience, and you can raise capital worldwide, not just within one area, and you have the ability to reach that audience through all sorts of media.
Well,
that has
you
not
can raise
traditionally
money internationally, in an offering through, the Reg S and a number of other means.
That's true, but traditionally they've been more focused in geographical areas where this phenomenon is worldwide. You have developers worldwide, and you have people who want to get involved worldwide, and we should keep it that way and encourage more development and these technologies to be developed for the greater good.
That begs for just a follow-on question, and then certainly the panel can chime in.
The big mistake is to look at this all the same way. The original people that contributed to the Ethereum ICO, they didn't expect anything back, right? They wanted to see this technology out in the world. This holds true for a lot of technologies out there that are just trying to build a community. So those people that are already involved with this community, and this might be developers, a lot of the early contributors right now are developers. There's anywhere between 2.5 and maybe 5 million people contributing to this space. So we're talking about a very small number of people. And most of those are highly educated. So they are very technical. They have been in the space for a long time. They're playing with the house's money. They have been early allocated to the space. And now they are kind of divesting their early winnings. Again, it comes down to no one goes down with their debit card, taking out fiat money and transferring this into any ICO. It's impossible.
You indicated, just one follow-on question or rebuttal. You mentioned that you can gain access to a broad universe of investors on a global basis. Would this be dissimilar to the proposition that this might be dumb money? One of the concerns, and it's not because of the technical expertise or lack thereof of the developers and those that play, but of the underlying business models that are trying to be launched through the ICO process.
A lot of them last year were hastily, but now you see more quality products come out. And don't forget, we already raised more money this year than of all of last year combined. And anybody contributing now to the large $850 million ICOs, they're part of that community, right? So for them, if they lose that money, it really doesn't matter. They're already part of that community. They have already been using the software for a decade at this point in time. They like that software, and if they contribute $100, it's like, oh, okay, I already got the value out of it to begin with. So look at the large plays, and also if you look at 2017, the top 12 ICOs raised 45% of all the money, and all of those had venture capital backing, including from Tim, obviously, right? You know that.
I think if you look at ICOs, they could be an incredible vehicle to accelerate innovation. So for example, if you're a company where you're at a stage where you're really a private equity play, now all of a sudden you want to do a significant innovation, which would be traditionally a venture play, ICOs provide you with a third option, essentially, getting the right level of funding, but without having to go the venture route and yet keeping everything as part of the same vehicle.
Would you consider as a given across the board that ICOs are a better way to go because you avoid giving up equity in your company?
In the journey of a startup, you see the startups are going after angel funding first, right? And they get some of the family and friends and people that they know excited to put a couple $1 million maximum into that idea. And then on the VC side, VCs wouldn't like to write a check less than $10 million because they want all the risks to be mitigated by the time they're coming. And it was not like that 2 decades ago, but now VCs are becoming private equities of 2 decades ago, right? So they have more money and they can invest more, and they're willing to write a bigger check rather than going through the earliest stage. So there is a missing middle. There's a concept of missing middle. The companies who have great technologies, mostly disruptive technologies that are not really, they can be fit in the defined metrics that the VCs have for considering a technology a good technology, because it's disruptive. They don't have anything in their previous data to compare them with, right? And also, there's another problem. The world is becoming bigger and bigger, and most of these entrepreneurs, they don't look or they don't act or they don't operate their companies the way VCs did, and human being would like to invest in people that they look like them, but these disruptive technologies and these new layer of the entrepreneurs, they don't look like them. So there are many of these problems out there for this missing middle to get funded. Right? So I think especially if you have mitigated the risk with angel funding and you're not ready to go and knock the door of these VCs, which is a very time-consuming job because you're having a platform, they want users, they want retention, they want revenue, they want everything to be checked before they write that $10 million. In fact, VCs should be really happy for this new instrument to come in and mitigate the risk even further for them to invest in a more lucrative class of assets later.
Yes, Jane.
You wanted pros and cons of ICOs. One of the problems with doing an ICO as a security is the escrow. If you, in the US, when you do a securities offering, you have to put the money in escrow until you get all your money, and then you get to keep it. So in the meantime, there's something called a custodian that holds the money, and it can only be held by a custodian, which has to be a bank. And to date, there's no bank that'll hold tokens or digital currency. You have to first convert that into fiat currency and then purchase the equity or whatever it is, whatever investment you're making, but it has to be converted to dollars first or whatever currency you're working in. That's a con to it, to being able to do that at this point, because there's no way really to escrow digital money yet. That's a serious issue.
But there is another creative way of doing that, and actually I would like to share my experience with others. Back in December when we started our private sale for MCART token, we got 2 big funds, Colin Star Blockchain Venture coming in, and a few accredited investors that we know. But all of a sudden, we received lots of applications. And around the same time, SEC came up with, we haven't seen any security. So our lawyer said that, okay, in 2 days, you raise $2 million basically. Stop it, because we need to figure out, the PPM, Reg D, everything that we need to file, and also KYC, AML, accredited investor verification, and so on. So we stopped that, and now we started our pre-sale again when we developed that software in-house, and we took care of all the legal aspects of it. And now we have 480 people whitelisted, basically, did the KYC, AML, they shared their, public wallet and everything, so we know these are real people, but we're not gonna accept their money, right, until the end of our pre-sale, practically, and I'm sure by then we have 2,000 applications in our hand, and pick the most kosher investors that are meeting all those SEC regulations and everything. So escrow is good, is a better probably instrument. However, as an entrepreneur, you can be also creative and do things, don't get too excited to get all this money, because you may return them, you may have to return them at the end. But you can do it in a slower pace, and don't fall into the trap of that hype, hyping your ICO.
Christian.
Well, at this point in time, KYC AML has already been done in everybody, because I assume they can only attribute with Ether or Bitcoin, correct?
Bitcoin or dollar.
That they bought on Coinbase or someplace.
But we don't take their money.
So, to me, it's a big red flag. For a short period of time, I was a prosecutor back in the old world. So if you told me that you did KYC, AML on your client, you just told me that you're selling a security, or you think it's a security. And well, then you shouldn't have been marketing it publicly, obviously.
No. That's not the case. You are marketing it to accredited investors in the United States. International SEC likes to see accredited investors, right. But you can pick your investors.
Okay,
you can pick your investors at the end. That's what you do even with traditional investors.
That part is correct, yes.
Yeah.
That part.
Okay, let's chill for a second. Let's open this up. We've only got 5 minutes left. Good.
Oh, so many hands.
Andrea. Yeah, here, catch. Here you go.
Yeah, it seems like a lot of the discussion has been around, not getting into the crosshairs of the SEC. by, we're talking about securities, but the issue remains, once it's a securitized token, there's no exchange that would be able to list some of these, right? So there remains this issue of liquidity. Can we talk a little bit about that and like what you
in the
see
US,
happening?
yes, you can't list it on the US exchange.
I got an answer for that. It's the token. The token is a share of stock that has parity with your token. So what you do, and you can exchange either direction with your token and your share of stock. Your share of stock has the same value as your token, so you can exchange them back and forth, and the stock on the exchange represents a certain number of tokens.
Gene, does that trigger a tax event? Is the exchange between the token and the share considered a tax event?
I haven't looked into the tax aspect of it, but I can tell you if they are both called the same thing, so the token is only representative figuratively of the stock and can be exchanged for it.
Okay.
Yeah, I would agree with Gene on that. Securitized tokens can represent shares of equity in an existing ongoing business.
It's a derivative.
And also you can sell it to your basically potential customers or people or entities that are using that, right? I mean, for us, we're actually now talking to retailers who need to buy this token. We encourage them to participate in pre-sale with 25% bonus because these are the guys who need to run those campaigns using utilities. So you have to be proactive to sell your tokens to people who are going to utilize it or companies who are utilizing it, not investors who are only buying it for speculation.
I want to get a couple more questions.
I've got just a brief question I would like to hear from the different panelists. Who creates value? Who is the person that creates value? And therefore, what, in my opinion, the answer would be the buyer is the one that creates the value. And therefore, if the buyer creates the value, who the hell is the SEC to come and tell me how I should create value? And that is the essence, I think, of a lot of these ICOs, because ultimately it is me, the buyer, who creates the value, and therefore nobody should come and tell me how to create value. That's my...
Agree with you.
Not only that, but it's
particularly if the proof is a proof of stake, right? Because you're a stakeholder in whatever venture that is, even if it's not a venture, right? You're staking your money and you literally get a proof of stake.
Not only that, but it's unconstitutional. You mean I can't invest because I'm poor, because I'm stupid? You're protecting me from, but I want to invest, and yet I can't. Did you know the SEC, the past SEC commissioner, is not an accredited investor and can't invest? How about that?
I would say that I would disagree.
The main reason I state is because it was a comparison between raising money through an ICO or another way of doing it, like an IPO. What I don't understand, and I'm technical, and I can understand the blockchain, but what I don't understand from a business perspective is you don't give any stock. You basically give a token. So it's much better to finance a company through an ICO than an IPO, because now you keep control of the company, right?
Correct.
Nobody answers the
Guy comes to
question.
my office and he says, I want to do an ICO. We're going to sell tokens. As a matter of fact, I'm on his board of advisors. Hope he's not watching. There's a guy came to my office. He's doing an ICO, and I'm on their board of advisors. And he said, well, we don't want to give away any equity. We just want some money. Okay? I said, so I told him, I said, well, I told him this token idea, you know, you'd have a token and have a share of stock that represents it, and you fully comply with all the laws. And his decision was, we're not going to come to the U.S.
But the token is the product of the company. You're practically pre-selling or selling your
Why
product.
not just do business with the company and buy the cookies that they're selling?
Not share, not a stock. As a product, exactly. So the software, yeah, or the platform creates that value for it.
The value goes from the value shifts from the shareholder to the consumer, to the company user. It's like Apple suddenly come out with a token, and all the Apple users end up with tokens, but where's the stock? Most Apple users don't have Apple stock,
No.
yet they're happy users.
And with that said,
So I think the product creates the value for the token. That was my answer.
can we thank this illustrious panel?
Yeah.
Thank you.
Thanks.
Okay.